Hi guys, welcome to the YouTube channel, the FX Bible. So today we are understanding the concepts of smart money and we are going to decode the swing movements of the UK 100 over here. So what I'll do is I'll take from the high point from here and we'll start discussing how the swings are being created over here and how can we decode the swing so that we can make the best opportunity within the same thing. So if you look over here, the price is basically has given us the highest point over here. So whenever you're trying to do the analysis or whenever you're starting the analysis, try to understand that you have to take it from the lowest point or from the highest point onwards. So if I would have been doing the analysis from the lowest point, then I can see that the lowest point is over here, like over here. Right. So either I can start my analysis from the lowest point available in the market, which I can see, or basically you can do the analysis from the highest point available from here. So if I choose this point, then I want to start my analysis, and this is also Asian session, so the analysis will be a little bit with the gap ups and gap down. And as you can see that the candles are not forming properly, but they are giving us some little bit gap downs and gap ups. It's okay, it's usual, and you have to be very much confident and you can say very much comfortable with these kind of situations in the market. So what we're understanding over here is how to decode the situations in this level. So as you can see that the price was going downside and then the price was making a last lowest point from here. So I'm trying to do the analysis from here. I'm trying to identify where is the last because it's in the market. So as you can see that the price was doing something like this. The price was making the swings in the higher form of higher lows and high highs. And then last but not the least, the price gave us a lower low from here, this point. Okay, so that's why we have to start doing an analysis. This is the lowest point, then the price started retracing towards this. So we'll mark this as a lower low and we'll mark this as a lower high because from this point onwards, what did happen? The price started moving towards the downside, right? Like this. And what did happen over here? The price gave us a breakout structure over here. So this is the breakout structure towards the downside. Now, what we are understanding from here is we have to find where is the internal liquidity in the matter. Since this is the last lower high in the market, that means if this high gets broken out in the market, the price will go into the basically opposite direction and will try to move towards the upside only and will not try to continue this trend. So what is happening till now, the trend was downside, and from here at point onwards, you can see that the price will go towards the upside. As you can see that the price actually gave us a chalk in this market. So we'll mark this as a chalk, or you can say the change of character from where we can understand that the price is given, or you can say the price has actually changed its direction towards the upside. Now from here, we have to calculate how the price is moved towards the upside. As you can see that the price started moving towards like this, higher high, higher low. And then this is another higher high, higher low. And this is another swing in the market. Okay, so you have to be very much confident when you're making these swings in the market. And that's why we have taken a, you can say one-to-one mentorship, and you can actually allow yourself to identify and you can understand and properly learn into how these swings are being made in the market. So one swing also is being made over here when you can see this is another swing over here. So this is how the price actually moved towards the upside. Now, when this, you can say when these swings are being recognized, you can understand the major point is this. The after the chalk, this is the major resistance that is happening in the market because this resistance is blocking the buyers to move and make the price move above. So what has happened is that the price will give us a retracement towards the downside, and then from this retracement, the price will try to move towards the upside again. Okay, and this is how the price actually moves in swings again and again. So after taking out this major liquidity over here, what did happen? Price basically started reversing from this order block. So this is the major premium order block. As you can see, this is the first order block. Is this has a proper imbalance as well. And in the coming videos, I will teach you what is a proper imbalance and how to identify these order blocks and these you can say these supply zones and demand zones. So you can see that this is a proper order block over here. But in my case of trading, I don't use the order blocks. Actually, I actually use the support and resistance being created on the right hand side and not on the left hand side. Majorly, what the traders are doing in these days is that they are using the order blocks or the so order flows and everything, a lot of things on the left hand side. They are finding or their efforts, they are putting the efforts to find major demand zones or major supply zones from the left hand side. But majorly, I believe that the push towards the upside or downside comes from the right hand side. So as soon as the price takes out this liquidity, the price creates a zone over here. The price creates a major support zone over here. From where you can see that the price was doing nothing but retesting this zone again and again, and finally breaking up towards the upside. So as soon as this zone is breaking up towards the upside, okay, this is a buy opportunity which you can take it from here. Put your stop loss through the nearest breakout candle. So this will be my stop loss with my entry over here, and I'll be targeting the first external liquidity because I know that the price direction is always is upside because the price is already given us a chop. From here, you can see that this is a basically breakout structure in the market. From there, you will actually do not just close the trade, you will start trailing the stop losses. And how you will trail the stop losses when the market one is moving towards the upside, it is always moving in the swings like this only: high, 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 low, high, 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 low, another high, 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 low, high, 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 low, high, 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 low, another high, 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 low, and another high, high, right? So this is how the price is moving. And what you're going to do is that you're going to trail the stop losses to the every nearest higher low like this, another higher low, another higher low, another higher low, this one, and last one is this. So when you will actually trail the stop losses till over here, you will be able to achieve the success ratio till over here, and your risk reward will be 3.35 risk reward. That means if you're trading with $100, you will be getting with $335 of profit in the market. So this is where I will get out of the market because I know now the reversal signature can come in the market. So from here, what I'm also observing is where is my new structure in the market. Since after this breakout structure, is there any kind of resistance that is happening in the market? And I want to know whether this, whether this trend will continue or will reverse in the market. So price has created a resistance at this level. So after the breakout, you have to find where is the next resistance. As you can see, this is not a resistance. This is a basically sideways momentum. And from here onwards, the price is first created the resistance over here. This is your major resistance in the market from where you can actually see that the sellers have taken over the market and the buyers are not in control anymore. And from this resistance, what will happen? The price will try to take out the internal liquidity available in the price from this swing to this swing. So this is your new swing in the market, right? So now we will another time do what? Because we have, you can say, grew these swings in the market, we will be calculating where is the internal liquidity. This is your first internal liquidity and this is your another one. So I'll mark the same for all of them. This is also liquidity. This is also liquidity. And this is the last liquidity available in the market. And as you can see, what had happened, the price took all of this liquidity. When the price started retracing in the market, the price took all of this liquidity, including this one. So what has happened? So price has taken out all the liquidity available over here, over here, over here, over here, and over here. Whenever the buyers are buying in the market, they're putting the stop losses below the support levels in the area. So we have bought from here. Some people have bought from here after the breakout. Some people have bought from here or over here. Where are they putting the stop losses below the supports? So this is the support, this is the support, and this is the support. Even this is the support. So basically, these are all the, you can say, support zones from where the buyers have put their stop losses in the market. Okay, and by decoding this, what we are understanding is once the price takes out all the liquidity. Okay, I'll teach you in the more, you can say, advanced sessions how you can take a reversal trade as well when the price is going like this, and how we'll be able to take a reversal trade so that we will be able to catch all of this liquidity as well. Okay, so basically from here, what we can see is that once we reach over here, price has come to the resistance again. Look at this. So sometimes this is a V-shaped recovery. Sometimes this is a V-shaped recovery, right? Price has gone down, and in the V-shape, the price has come back. And because of these, you can say the entry points are a little bit vague in the market. You cannot just expect that the market will, reverse from here and then will go towards the upside full and full. And even if you do, you have to risk very low. So one entry that you can do is from here at this point when you know that all the liquidity has been taken out by the market itself. So first point, you can say that you can take the entry over here, but this is not a very genuine entry, I'll say, because not everyone can catch it, or you have to be very aggressive while taking this entry. So first entry is this, when you will targeting the external liquidity from here and you will be making the structure over here. So what we are doing is we are making the structure again. So I'll mark this as a higher high and this is new higher low in the market. So where is the genuine entry? Now let's say if this is the one entry which I cannot take, but no doubt this is 6.15 RR and you have to be very aggressive while taking this entry, which is the next available entry in the market. So when the price is coming over here, retesting this resistance, and then the price has started flowing towards the upside again and again and retesting this area. As you can see, 1, 2, 3, it is retesting this area again and again. That means the price is actually making this weaker and weaker, this resistance area weaker and weaker. And as soon as you can see that there is a formation of a higher lows like this, first high, high, higher low, and then new high, high, higher low, and then like this. So first you can take what? You can take your first entry from this point, either like this, and put your target like this, or the second entry is from this breakout, from where you will be taking the entry from here, you will be putting the stop loss like this, and you will be targeting towards the upside of 1:3. Because the breakout is very near, look at this, the breakout structure is very near, the major resistance is very near, it's a little bit low probability trade. Not all the swings you will be able to catch up in the market. So what you need a perfect system. You need a perfect system which can give you entries on the basis of the risk reward only. If the risk reward is good, only then you should be taking the entries, otherwise you should not be taking the entries. And this is how you need to understand the smart money concepts happening in the market, so that you can take again and again the same trades available in the market. So now when the price is moving towards the upside, price has created the first resistance in the market over here. As you can see, this is the major resistance available in the market, from where the buyers were not able to go towards the upside, or you can say the price started moving towards the downside. And below this level, there are major liquidity points. Where are the major liquidity points? First is this one, because when the price continued this higher high and higher low, if you look over here, price created another high high, right? It's like this. So what is happening? Price created first liquidity over here. This is your first liquidity. This is your another liquidity over here available in the market, and then the next one is this. Okay, and then the next one is this. So this is the major liquidity points which are available in the market, from where the price will do what? When the price starts retracing towards the downside, the price will be taking all of this liquidity out and then forming towards a higher high again. So once the price is doing this, now many traders do what? Many traders are finding the order block over here or over here like this, or this is the order block like this. Okay, don't push yourself to identify the real order block in the market. It's very confusing. I have spent many of my years understanding how to identify the perfect order block, but I'm telling you guys, it's not very easy. Okay, rather do what? Rather, start finding the order blocks, or you can say the push zones towards the right hand side. So rather than analyzing on the left hand side, which is the identifying zone, which is a good zone in the market, try to focus on the right hand side of the market. That means when you're pushing the market towards the downside, the price will create a support over here. Look at this. The price will create a proper support over here, from where the price will not be able to go downside. Usually when the price wants to go downside, how does the price go downside? Lower high, lower low, lower again, and lower high. But over here, as you can see, the price was not able to create any other lower low in the market. That means the domination of the sellers is being now weakened. So as soon as the price creates another higher highs like this, the price starts creating higher highs like this, you can actually take the trades on the breakout of this higher high. So first trade I will be pushing over here. I'll be putting my stop loss on the 50% of this big candle like this, and I'll be targeting towards the major high in the market because this is the major higher high. Now look at this. This is the major higher high. Right. So in this trade, I have made a profit of 4.79. That's mean I have converted my $100 into $4.79. Now, so far, so soon as you can see, I have decoded the three swings in front of you. This is how you can play again and again, again and again. You don't have to switch to your strategies. You don't have to put any indicators. Have I put any indicators in front of you? No. But I'm able to see the market. I'm able to understand the market again and again very easily. I'm using the same concepts again and again. And that's how you decode in the market. No doubt in the furthermore videos, I'll be decoding a lot of things other to you, and you will be understanding the smart money concepts with me in a very basic sense, or you can say in a very smart way. But the thing is, you have to do a lot of practice. Okay, without practice, these concepts are a little bit not easy to understand. But once you are getting handy with this, as you can see, I'm applying the same concepts again and again, again and again, again and again till the third swings. And once the consolidation starts, I would also, teach you how to basically catch the reversals as well. So in the further videos, I'll be able to make you understand how you are able to catch the reversals, and you're going to make some money. And our major risk reward is, you can say the major game in this, my USP, you can say unique selling price in this game is my risk reward. Every trade of mine is having a risk reward of 3.29. Over here, it's 6.15. Over it's 3.33. And over here, the last one is 4.79. That means we are tripling, or you can say 4 times or 6 times doing our money. Even if you have a stop loss of $10, you're making it 50, 60, 30, 40, right? And let's say if you have bigger stop losses, like you can do in the future course, you will be having a lot much more game in the market. So this is how we are going to understand a lot of things in the market. So for any other queries, you can come us. So the idea I have given you in the downside. You can query us about the educational things, and you can query us about the fund management as well, because we are trying to do a lot of things. We are trying to distribute a lot of profits to the people who are being with us. Okay, guys. Till then, good luck to you traders. See you in the next video.